Thanks for joining us today on Market Call. I'm Morella Fernandez. Ross Healy with us on the show, chairman at Strategic Analysis Corporation. He'll take your questions on North American large caps. Here's how to reach us. 1-855-326-6266. If you'd like to email your question in, you can do that. Market Call at BNNBloomberg.ca. Good to see you. Thanks for coming in.
Thank you very much for having me.
We've been talking a lot about the price of oil going up with the conflict in Iran, but I'm also wondering what the cost of this conflict will be for the U.S. and whether you think they can afford that.
Well, Marilla, I think one of the huge issues that the U.S. is not facing, but should be facing, is the issue of what happens to Iran. Does society collapse there? In which case they're going to have more boots on the ground. Now they've already promised a bunch of Marines, but now they're talking about much more than that. Well, listen, we've seen this before in Iraq, and your costs just spiral away, and that I think is really the big concern.
Okay, so it's something you think so far is contained, but has the threat of going...
It has the threat of being, I was going to say going viral, but not quite, but you know what I mean.
Yeah.
It can get a lot worse. And in the two other cases where the U.S. has intervened in the Middle East, has
in Venezuela as well.
Yes, yeah. Exactly.
Okay, so let's talk about the One Big Beautiful Bill. All of that rolls out this year as well, and the benefits of that to taxpayers and to businesses in the U.S. Can they afford that right now, considering their balance sheet?
No.
Okay.
No. And you said the benefits to businesses and taxpayers. There's not much benefit to individual taxpayers.
They get higher tax returns, don't they?
I guess they do.
Okay.
Yes. The big benefits are to the big corporations, and it just continues a 45-year trend since Reagan started tax cutting, and it just carries right on. The problem is now that the big beautiful tax bill is going to result in a huge increase in the deficit, and given the weak condition of the U.S. balance sheet, what that tends to do is push over into a weak dollar and rising inflation, and I could well see that is exactly what could happen.
Okay. I do want to get you on AI quickly as well, because a lot of the tech stocks got pushed back and left behind over concerns about how much they're spending on AI build out. I'm wondering whether you see a resurgence for the specific Mag 7 or just the beneficiaries beyond that.
Okay. Let me go back 26 years to 2000. Where we had the last big high-tech explosion. This time was in fiber optic systems. Well, we're back at another systems build out. Well, it isn't that in the long term they were all needed and required and used. The problem is in the short term, if you way overbuild the number of AI server farms, then what is going to be the capacity utilization, and therefore what's going to be the profitability of these things? Well, historically, when you see one of these, I mean, you can go back to railways, for heaven's sakes, in the 1800s. It's happening all over again. Vast overbuilding, and then from a stock point of view, you get a big correction, and I mean a big correction, Marilla, not 10 or 15%.
So you're talking 20%, 25% more?
No, I'm talking 85.
Wow. Okay.
I'm not. This isn't trivial. When these things set back, even you go back to 2000, even the great companies like Cisco had huge setbacks. Okay, even though they came through. Okay, and I think we're very much facing the same. kind of issues. Everybody's talking about AI, okay? But who is using it? Who's really using it to make money in a non-trivial sense? I mean, we use AI, but in a trivial sense. I could use the cheapest chip I could possibly find.
Remind me when my wife's birthday is and what she likes, right? Okay. In a trivial way. But who's using it to benefit the bottom line?
That's right, and there's the issue. You know what people are saying is, I'm the boss. Okay, Marla, I want you to use AI to make us a bunch of money.
Yeah.
What did you in mind, Ross? Yeah. Well, think of something.
We're not quite there yet.
We're not there yet. We're not there that where it's spinning ahead. We may well get there, but it's going to take some while. And we know what happens in those circumstances. Okay, the initial blush and euphoria and love and go on forever, and then the big setback. However, in those big setbacks, you get some marvelous trading opportunities.
And that's what we're going to watch for. Okay.
And that's what we're going to watch for.
Let's take a quick break. We will line up the first phone calls for Ross Healy. Here's how to reach us. He'll take your questions today on North American large caps. Back in a moment. We're going to start with an email here from Janet. She says, I hold Telus. It has a very nice dividend of almost 10%, but the share price has been steadily dropping. Should I continue to hold or not? So this is Telus, which did make some changes to its dividend, but people still like that big dividend, though the stock price has gone down, so they don't know what to do. What would you advise them to do?
I think that the dividend has further down to go. When I look at our chart of Telus, what I see is a balance sheet because we basically regress the balance sheet trends against price trends. We see a balance sheet that is slowly slipping away, which means that the company is essentially paying its dividend out of capital, out of permanent capital. Now, you know, their cash flow, free cash flow, has been covering the dividend, but it hasn't been covering it. It still means that they've been covering equity. Now, Darren Entwistle is retiring at the end of June of this year. And Victor Dodig, who comes to Telus from the Bank of Commerce, is now taking over. So you'll notice that you have a money man, if you want, a balance sheet man, if you like, replacing an operations kind of a person. And my suspicion about Dodig is he's going to take a hard, long look at Telus and say, look, we can't continue sloping away, paying out too much money. We're going to have to cut that dividend. And the question, therefore, Marla, is how far? Well, if you look at the dividend payout of BCE or Rogers, okay, you're running a dividend payout in the order of like 50 to 70%. Well, if Dodig cuts the dividend that far, if it goes down to 50%, for instance, we're going to see a dividend cut in the order of 73%.
Wow. Okay, so even if you like the dividend right now, it might not stick around.
I think when Dodig's in charge, that he is going to take charge of the balance sheet and get things set up for growth. And right now, the company is not set up for growth, but I think he's going to set it up for growth. But he's got to get some business taken care of, and the dividend is part number one.
Got it. Yep. Okay, let's go to the phone lines. And Brian on the line today. He's in Cochrane, Alberta. Hi, Brian.
Yes, good morning, Marella and Ross. Thank you for taking my call. I was wondering your structural value analysis of Tourmaline oil. They cut their, they don't have a special dividend for this quarter, and technically it seems to be breaking out of a long base. So I was just wondering your opinion on it. Thank you. Have a good day.
Thank you for the question, Brian. Tourmaline oil, what do you think?
Okay, listen, Bob, I entirely agree with you. There has been this long base, and it looks as if Tourmaline is breaking out there. We would have a kind of a tentative target of $80-85 on that. What I see here is that the earnings were sort of going flat and then down, but now they're ticking back up again. And with this whole Iranian situation turning the price of oil and gas back up again, I think that's probably quite bullish for Tourmaline. I would certainly buy it and hold it here, that's for sure.
That was for Brian in Alberta. Let's move on to our next caller. Then Bob's in Toronto with his question. Go ahead, Bob.
Yeah, hi, Marella. Great show as always. Ross, your thoughts on Element Fleet Management, EFN. I've had it for a while, made some good money on it, but it's been dropping quite a bit over the last number of months. So I'm just wondering if I should sell or continue to hold. Thanks a lot for your comments.
Yeah.
Thanks for the question. Go ahead.
It's Elements. It's got a really interesting chart, if you like. The stock was way down at more than a 40% discount to book value back in 2018, and has been rising steadily ever since. In the meantime, when I look at our charting of the earnings and the fair market value, it's been sort of going dead flat. So Element has caught up to that fair market value and has actually popped out above it. And it kind of finds itself in a strange place. So it's pulling back. I don't think, unless there's a good argument to be made for a substantial increase in the earnings, which I would have to investigate further to see if that was the case. I don't think there's much in it for you at this price. This stock has kind of given at the office, as it were. It's had a heck of a run, and I think we should be very careful about expecting it to go much further.
Okay, that was for Bob. Let's move on to the next caller, Kevin. He's in Toronto. Go ahead, Kevin.
Good afternoon. Thanks for taking my call. Ross, I'm phoning about Finning International.
Yep.
Is today's pullback just a normal correction after meeting recent highs? Is it a good entry point? Thank you.
Okay, we'll have a look at that pullback today, down $6.04, or almost 7%, Ross.
To what's that price then, Marilla?
82.41. So 82.62 is where I have it on the chart now.
Okay, from our technical point of view, my view of Finning is that it had a lovely move actually from about $45 to a high of 88, but it's now run past its own fair market value, and I think a pullback has been and is in order, and in fact is doing it now. It's got to hold technically at $78. Okay, that's a critical breakpoint level there. If that does not hold there, then we can expect a bigger correction there. Again, I look for the trend of the earnings forecast, and it's just kind of flat. So I don't see what's going to power the company.
You'll hang on until about 78. If it goes down under 78, at that point you'll
78.
Sell. Time to go. Kevin, I hope that's helpful for you. Let's go to Dan. Dan's in Cochrane, Alberta. Hi, Dan.
Hello?
Hi, go ahead.
Hi, yes. I'm a Canadian dividend investor, and I get very confused about the Brookfield group of companies. And I'm just wondering which one would be best for a 5-year investment that would pay me the best dividend, seeing that I'm 75 years old, and which one do you think would be my best
Your best bet.
investment.
Okay.
Okay, well,
So Brookfield Core, the under 1% dividend.
yes, it is. That's a half of 1%. So that's neither here nor there. If I look at Brookfield Asset Management, that's 3.3%. And that stock is very, very expensive and is now coming down as well. I don't know what other Brookfields.
Brookfield Renewable has just under a 4%, so 3.9% yield.
What's the symbol?
Renewable. So that is BEPC in the U.S. BEP is in policy.
BEP, right?
Yeah.
Yes, okay. Thank
So that's
you.
a renewable. So that seems to have the highest dividend, I guess.
Wow. Well, looking very interesting, but holy smoke, is this stock expensive? And worse than that, when I look at the balance sheet, going back the last 3 or 4 years, it's sort of slipping down, and that kind of thing worries me. I don't like to buy slipping balance sheets.
Would you buy any of Brookfield at this point? I'm looking at the Canadian Renewable, and it's got a 4 point.
No, any of the Brookfields that I looked at here, I wouldn't buy any of them. They've moved nicely, but I think I don't see anything for
a dividend holder. Got it.
For
Okay.
our viewer. Yep.
Let's take a quick break then. We're going to be back with Ross Healy of Strategic Analysis Corporation. Again, he's taking your questions on North American large caps. Here's the number to reach us. Back in a moment. Welcome back to Market Call. Let's go to an email from Ed. He says, could you give me your assessment of NTR? So Nutrien is what the question is, the fertilizer company.
Yep.
Obviously, some of these stocks have been benefiting from what's going on in Iran and supply shipments there. And let's take a look at the chart in a moment. But what do you think about Nutrien?
Well, Nutrien has done a lovely kind of U-turn there, and it started out. Let me see. Yeah, it started out about 4 years ago at trading about twice book value, and it had a very, very strong earnings trend with it, and then that earnings trend just fell away, and now the earnings trend is sweetly coming right around again, and the stock is following that earnings trend and the fair market value trend up nicely. I like the stock. It's in our client model portfolio, and I have a tentative cross your fingers target of $153.
So would you put new money into it today?
Yes.
Considering how much it's shot up already?
Yes, I would, because if we go from 106 or whatever it is today to 153, that's not shabby.
Okay. Good to know. Let's move on to our next caller. Gord is in Oakville, Ontario. Go ahead, Gord.
Hi, Marilla. I'd like to ask your guest's opinion on where he sees Agnico Eagle going over the next year.
Okay, thank you for the question. Agnico Eagle, very well-known company. Price of gold has come off
Yes.
more recently with what's going on.
And so is the stock price with it. But I think we have to look at Agnico Eagle together with its, and I'm going to say its sister company, but Alamos AGI. These are arguably, I think, the two best-run gold companies, maybe certainly in Canada, if not indeed in the world. And why do I say that? It's because they are able to continuously replace their mined ore with fresh reserves, but not only fresh reserves, but fresh high-quality reserves. So that's one of the problems, of course, with the mining company, is that the longer it goes, the smaller it gets. So you got to keep on expanding. And Agnico Eagle has had a very, very good record of doing that. I think a pullback gives you a chance to buy the stock cheaply. Although, don't ask me how low the price of gold is going to go.
Well, that's the other half of that equation, right? People are
right.
wondering, with the run up gold has had,
Yes.
whether there's still room to run for that.
Well, you see, what I do is I put the price, I put gold in the context of the U.S. sovereign balance sheet, which is brutal, and maybe getting potentially a lot worse. So when that kind of thing happens, as I say, you tend to get currency weakness and then renewed inflation. How do you protect yourself in that kind of environment? Well, historically, precious metals has been one, high quality industrial stocks has been two, and unlevered real estate is the third one. Well, gold already had a run and sort of like, whoops, okay, got a little ahead of itself here. But down the road, do I see any improvement in the U.S. balance sheet? No, certainly not with Donald Trump in charge.
Okay, at least not for the next few years.
Another 2.5 years.
Let's go to the next email from Clifford. What are your thoughts on Goeasy? Short-lived problems from my perspective. Still a $5.5 billion revenue company. Dividend suspended temporarily. A lot of concerns about Goeasy and the private credit space. They suspended the dividend and guidance as well. Would you step into Goeasy with where it is today?
No.
Tell me why.
Okay, first of all, the issue is the private credit market, and Goeasy kind of serviced, if you like, the lowest quality of the private credit market. Now they've done a superb job doing it, but I think that reality has kind of caught up with it. And it's not only with Goeasy that it's caught up with, it's caught up with Blackstone, which has had a setback, not a nasty setback because it's got lots of cash, which Goeasy doesn't. But there have been several other U.S. companies in particular which specialize in buying private credit, and they are all under terrific pressure. The investors are looking at it and saying, like, help, let me get out. And the response of the companies there is, nope, we're freezing redemptions.
So if you held Goeasy and have had to watch it drop, would you sell at a loss today?
Well, when I look at Goeasy, from our perspective, what is the market telling me? Well, where the stock is right now, it's telling me, the market is telling me that about 40% of the equity of the company is just being written off. That's what it tells me. I don't know what will actually transpire, but that's what the market is telling me right now. So I want to get that. I would want to get that behind me, and then see if there is going to be some renewed confidence in the company again. And until that time, I would be quite inclined to let somebody else enjoy this stock.
Okay, let's do another email then. We have Cowan who's written in, can I please get your thoughts on Dye and Durham? They seem to be starting to recover. I haven't looked at Dye and Durham in a little while, so we'll pull that up. They've been dealing with an activist investor and see where they are. What do you think of Dye and Durham?
First of all, when I look at the forecast for the company, the earnings forecast and so on, there's still no earnings recovery in sight. And then when I look at our chart, as I say, it shows the trend of the balance sheet against the trend of the price. Well, the trend of the balance sheet of Dye and Durham has been going down and down and down and down and down. Now, the stock has had a nice rebound here lately, but the problem is, unless you can tell me where the earnings, or tell the analysts where the earnings are going to come from, then what's going to drive the company much higher? You get a nice bounce, wonderful. Take it, say thank you.
Move on.
Yep.
Okay. Let's take a quick break then. We're going to come back with past picks from Ross in just a moment. Stay tuned. Welcome back. We are going to go through Ross's picks from March 5th of last year, so just over a year ago. Fortuna Mining was the first pick, FVI, on the TSX at $6.41, now to $12.26, so 91% upside return, 87% total return. So not bad, Ross. I mean, 87, 91%. You did okay.
We'll pass with the push.
Do you remember last year what you liked about Fortuna Mining?
Oh, cheap. And of course, I really like having gold in my portfolios, and by the way, Fortuna, if there's another company that is also really good at replacing their reserves with high quality reserves, Fortuna is another one. It is strictly a gold company. It used to be Fortuna Silver, but it's now strictly gold. There, and it's done a nice job. Now it's like everybody else. It's had a nasty setback, but I think that's just an opportunity to buy it.
I was going to say, would you use that opportunity to pick it up?
Yes, I would. Yeah.
Okay, so it's at 12.19 is where I have it today. Let's go to Power Corp, which is your next pick from last March, POW on the TSX at $50.44, and then $63.06 today, 25% upside, 30% return. They provided a number of different services. What did you like about them? Have you held on to the stock?
I've held on to the stock, even though it's been up and set back. What I like about Power Corp is it's under new management. That is to say, the Desmarais boys, after floundering around with the company for years and not really doing anything with it, then hired some professional management, and things, I think, appear to be turning around for the stock, and it's gaining kind of a new lease on life, as it were, and I like that.
Where do you see growth for them?
I don't know.
Oh.
I don't know. I haven't a clue where they're going. I mean, that's
so you like the
ask,
management team, but quite often, you know, the management team's one thing. They've got to have a product that they work with.
That's right. Now, what's working against Power Corp is that it does hold a huge position in a mutual fund management company, and the question is, where is the stock market going to go from here? And the other really big holding is in insurance. And that still looks to be okay to me. Now they have some European holdings and so on. So I'm curious. I'm inclined to stay with the management because it looks already that the market is rewarding them and is expecting it maybe now to go higher.
Okay, let's move to your last pick, which is also a mining company, gold mining company, OceanaGold, OGC on the TSX. At the time when you chose it a year ago, sorry, we don't have that board. Let me have a look here. It was 409 a year ago, now to 39.90, but I have it here up at 41.28, which is the live board. So did pretty well. It's a 225% return, total return of 227. I know it's laughable for you, but quite amazing. How do you pick and choose your mining stocks?
Well, what I like to do is to, first of all, find cheap stocks. And OceanaGold was certainly fitted that bill absolutely beautifully. And then, of course, it has to be in the gold sector. So, cheap gold. What's not to like about that kind of company? And so anyway, we were really rewarded last year. Eh? That was lovely.
Same question. Would you dip back into this, considering it has been off more recently?
Yes, I would.
You would.
Yeah. Okay. Yeah. I think on a setback, I would be inclined to buy more of it. Yeah.
All right.
I wouldn't rush. Let this gold, whatever it is, flutter, sort of get.
But you would step in.
Get by, but I think you'd step in. Yeah.
Okay. All right. Let's take a quick break. Then we're going to get back to your phone calls for Ross Healy when we come back. Stay tuned. Welcome back to Market Call. Henry is on the line. He's in Vaughan, Ontario with a question today. Henry, go ahead.
Well, hello, thank you. I'm calling about MPLX. It used to be part of Marathon Oil.
Oh, yeah.
What's your outlook for the MPLX? It's paying a very good dividend and it has a good uptrend. Thank you.
Okay, thank you for the question. 7.5% dividend for the company. What do you see?
Well, I guess a couple of things. The first thing is I see that the dividend of $4.31 about matches the earnings estimate, which is $4.56. It was $4.86 last year, but $4.56 for this year. So the stock is the company is getting up to paying out pretty close to 100% of the earnings. So I don't think we should probably be expecting much more from that. Now, the stock itself is getting up to quite a lofty valuation, closing in on 4 times its book value. There, the PE is okay at 12 times or so, but then the fair market value is kind of running flat, and the stock is moving nicely right up to it, probably on that yield. It's hard not to like the company, and if I was push come to shove, it looks as if there's a possibility that the stock could move to about $68, which would be about 5 times its book value as we measure it.
So clearly a hold.
So I would say clearly a hold. Yes. And there's nothing to panic about, and of course. With the Iranian situation, anything that's got oil and gas in it is very clearly a hold.
Is doing very well right now.
Yep.
Let's move on to our next caller. Then Paulo is on the line. He's in Guelph, Ontario. Hi, Paulo.
Hi, Marilla. Hi, Ross. Thank you for taking my call. My question is on WSP Global. I've been keeping an eye on this one here recently, as it seems to have given up about 2 years' worth of gains. I've always held this company in high regard and was thinking about taking a position. But before I did, I was wondering as to perhaps your insight as to the reason for this downward pressure, and if you think that there's a turnaround here coming sooner rather than later. It's a position that I would be holding in my TFSA account here for a medium to long-term hold. Yeah. Thank you.
Okay, good to know. So WSP would benefit, I imagine, from some of the infrastructure bills that are to come, courtesy of Ottawa?
Yes, I would definitely say so. You know, when I look at my chart and the thing, and I look at the trend of the fair market value, it's beautiful. It's just steady, just up like that. And the stock followed that trend for a long while, and then it sort of got above because it was so regular. So people rushed in and said, "Well, I'll take it," and then it set back there, and then moved up again, and then it set back. The 5-year compound balance sheet growth has been 16%. Nice return on equity there. I would say that the company got ahead of itself and has pulled back to its fair market value, and that's very, very common in our work. We see that all the time. Probably my downside target might be in the immediate short term might be about $206, which would carry it down to about 3 times book, and you know, nice as I say, nice ROE. But the problem is that the fair market value potential has been taken out of it. I'd actually wish it would fall back even further than that. I know you wouldn't, but if I was going to buy it,
he might, because he hasn't picked it up yet. I think
he hasn't picked it up again. Okay, then when I look at that in a longer term sense, I could say, look, if it pulls back to twice book, which has been a very stable bottom, that would be 165. I would love to be able to pick the stock up there.
So it's a watch for you right now.
Yes.
Okay.
Yep.
All right, let's get to Roman in Edmonton with his question. Hi, Roman. We can't hear you. Could you speak up?
Nice ROE.
Okay. I can't really make out what he's saying, but I think he had a question about energy fuels. If you can look that up and tell me what your gauge is for energy fuels.
Wow. Energy fuels has just exploded in price from a low of $5.33 in 2025 to the current 25 now. This is the kind of company I would say it gave at the office. If you like to pursue momentum, then by all means pursue momentum. If you want to pursue value, it's the wrong place.
Okay. All right, let's take a quick break. Then we're going to come back with more of your questions for Ross in just a moment. Stay tuned.
Go bust.
Welcome back. We have Marge on the line. She's in Sarnia, Ontario, with a question today. Marge, go ahead.
Hi, Marella. Thank you for your insightful questions. You seem to be able to anticipate what callers are thinking about. And Mr. Healy, I want to thank you especially for recommending Alamos Gold. I bought some at 9, some at 15, and I sold my last shares a few weeks ago at a nice, tidy profit.
Good. Good.
I would like to start and step into wheat and precious metals, and maybe again into Alamos. I'd just like to know your opinion on when it might be a good time to step back into these two. Thank you so much for your advice. Bye-bye.
Thanks for the question, Marge. Go ahead.
Yeah. I think it might be maybe a little bit early to step back into the precious metals, and wheat and precious metals in particular. It's a terrific company that's done very, very well, but it's way outstripped its own fair market value. So I would anticipate that we might get a further setback in that before it's all over. Alamos, the same kind of thing. I really like Alamos a good deal because, again, I think it's probably the best managed of the Canadian golds, and its own forecasts for production and sales going forward are spectacular. So I think that this is going to be, you might call a growth gold.
All right, that was for Marge. Hope that helps her make a decision. And we are going to take a quick break. We will be back with new top picks in just a moment. Join us tomorrow for Market Call. Greg Newman will be on the show. Senior Wealth Advisor, Portfolio Manager, Newman Group, Scotia McLeod. He'll take your questions on North American equities. That is tomorrow. Let's get to some new top picks from Ross. We're going to start with Alamos Gold, AGI on the TSX, which we had discussed a little bit about, gold coming off the way it has. But when would be the right time to step into something like Alamos Gold?
Well, Alamos Gold has set back actually to what I would have considered to be my downside target, which is around $54, and it's a little bit below that. So I'm kind of rooting for it to grip here.
To hold around there. Okay.
Hold around there. Yeah.
So for the average investor, would you buy in today then?
If I were, if I were initiating a position, I might say, okay, I'll buy a third of my position that I was planning to buy, and let's see what happens. I've often found when we have stocks that are in setbacks, if you buy it in stages, you tend to do better than to buy it all at once.
Because then your one price is stuck, and you're sort of paying attention to the one price and how far you are off.
Yes, exactly. Yeah.
Okay.
Yeah.
Let's get to your second pick then, which is Western Union. I'm interested to know why this is a choice for you for a top pick.
Okay. Actually, a number of reasons.
Okay.
First of all, the stock has a 10% dividend.
Very nice for dividend holders.
Which is very nice for dividend holders. Now, best, I think, if you hold it in an RSP or something, because if you're a Canadian and you get it, you pay a lot of withholding tax. But that's number one. Secondly, the stock is really cheap. It's trading, its PE ratio, I think, is 5 times right now. Now, I would call that. And then, how profitable is the company? Well, if we take the analysts' forecasts at their face value, the analysts are forecasting a return on equity of 43%.
Okay.
Well, if you're looking at a 43% return on equity and a 10% dividend yield,
what not to like?
What's not to like?
Okay, but my question is, do you take the analysts' recommendations at face value? How would you back that up?
Yeah. Well, I know that there are concerns about Western Union. There's no question about that. Otherwise, the stock wouldn't be down here. And one of the concerns is that AI companies and so on will maybe will cut their grass, and it will take away some of the profitability of the business that they do. But it overlooks the fact that they aren't the only guys using AI. So is Western Union, and they're looking at exactly the same things. And so far, Western Union has not disappointed. And as long as it holds in here, by the way, the upside the potential for that, as we measure it, is 200%.
Not a bad upside.
Not a bad upside. So I would be very happy to take a 10% yield. Just give me 50%, and I'll go home.
You'll
quietly.
be happy. Okay.
I'll be happy. Right.
Let's get to your third pick then, which is Algoma Steel, ASTL on the TSX. Steel, of course, hard hit Canadian industry right now with tariffs. You're betting on a change there?
Well, this is speculative, Marla. Okay, this is not this is not Western Union. This is not Alamos Gold. This is speculative because my feeling is that the USMCA trade agreement is now coming up for renewal, and the question is, what is Trump going to do about it all? Well, the pressures from the auto industry, from the steel industry, from aluminum, and so on, are intense to get those tariffs down. And let's get back to some kind of a semblance of a reasonable North American economy. Again, now how Trump's going to respond, of course, is the big question, which is why it's speculative to me. But the stock price, by the way, has been absolutely wild. At one point, the stock was up 17% this year, and now it's down. I forget what it is, just this year alone. So don't think that you're going to sleep well at night if you buy this thing, which is why I say speculative. But it's intriguing, and a little bit of a bet on it probably wouldn't hurt you.
Okay, so we'll see what happens when CUSMA does or may not get reviewed and renegotiated, or the outcome there.
Yes.
Thanks for joining us, Ross. Appreciate you coming in and joining us for the program.
Marilla, I have had a really good time.
Good to know.
I consider this program the fastest hour of my day. It just
painless is what we aim for. Thanks very much, and thank you for joining us today on Market Call. We'll see you back here tomorrow.